Obviously, if you're investing your money, if you're trading options, it's because you want to have like positive returns, or at least you want to beat the market. You want to beat the market index, because otherwise, what is the point of actively investing or actively trading, right? But the problem is, it's very, very extremely hard actually to know what are achievable returns, because all the garbage that you see online, and honestly, like, let's call it as it is, there's plenty of garbage online on YouTube where you see people like advertising insane returns. Like, you know, even Warren Buffett like would love to have this type of returns, and you see so much things online that it's very hard to actually have, you know, plausible, achievable returns in mind and know what to expect because of everything that you see online. And that's why I wanted to make this video, because obviously, you know, I don't know everything, far from it, and I don't pretend like I know everything about the stock market or I trade options like, you know, a god or something. I just do my thing. But what you see online is like of another beast. It's very hard to, as a beginner, to know what you can expect when you trade options, or what are some achievable returns, basically what you can expect. Because the problem is, everyone who is usually involved within the financial markets, especially on YouTube, they're going to want to sell you something. So it's in their interest that you believe that you can achieve, you know, insane returns, because that's going to make them earn money, because they're going to sell something based on that. So there's always a huge conflict of interest, and that's why I wanted to make this video, because I want to share my experience, what I've been through, what I thought was true in terms of returns, and how after that I changed my mind on what are actually achievable returns. So I wanted to make this video because for those who are just getting into options, or maybe someone who's watching this video is like really struggling with options, I wanted to a bit reset the expectations and let you know what you can really expect without all the fluff and without any conflict of interest. Because as I said, that's the very first problem that I see usually on YouTube, and there's honestly some people that are on YouTube that are talking about, you know, trading, investing, or at least being actively engaged in the stock market, and honestly there's a whole culture around this that needs to be debunked, because it's been going on for a long time. For example, when I started like quite a long time ago, because I started with the wave and the rise of all those people on YouTube. That's the people that I started watching when I started getting invested in the stock market, and you would tell me what a great example. So we're going to first of all describe a bit what is the culture around trading out there, what is going on, what are the different type of returns you can hear on YouTube, and people are absolutely sure that it's doable. Then I'm going to share a bit more about my story and how I'd first believed that, you know, it was completely possible to make 200% a year consistently, and then how I changed. And hopefully it's useful for some of you who would like to get into options, or maybe if you're already watching some people like this, maybe it helps you resettle a bit your expectations so you can start off the right foot. So as I said, there's really like a trading culture on YouTube. At least there's really this group of people who are going to advertise how you can, for example, trade options or trade in general, and how you can be active in the markets and basically generate positive returns and beat the market that way. And in theory, there's nothing wrong with, in my opinion, you know, being actively engaged in the markets. There is nothing wrong with that. The problem is in managing the expectations. And usually the big problem, in my opinion, is that there's a lot of conflict of interest. Is that a lot of people who are going to tell you that you can achieve 100% return a year, year after year, and they're the same people who are going to try to upsell you on some program or something. And for me, that's where there is a really big problem in the trading culture in general, online, on YouTube or whatever, is that the expectations are really not managed. And I think it's important to resettle a bit the expectations and know what you can expect before getting into options, before getting actively trading with your own money, because otherwise you're just going to get burned. Because at first, it's important to understand that the financial market, the stock market, when you get engaged in the stock market, when you invest your money, all of this at first is to improve your returns, meaning that you cannot make money if you don't have money at first, in at least in the stock market. The goal of the stock market is to take money that you have and basically make it grow. But if you don't have money at first, there is absolutely no way you're going to go from, you know, 0 to 1 million. And of course, there are some exceptions, meaning that if you had bought a call option, like a very far out the money call option on GameStop right before it, you know, skyrocketed, of course you could have made a killing doing this. But these type of things is more the exception. It's not necessarily representative of the whole active trading community. They're not like GameStop opportunities every day. And that's usually the first thing that I see about trading, is that somehow, on YouTube, trading has been replaced from like a way to grow money that you already have to a way of making money from scratch and basically getting super rich from nothing. And that's, for me, the first mistake that I've done when I started getting into at least trading or in the stock market or actively trading, is that I thought that you could make money out of nothing in the stock market. And it's false. To make money, you need to have money at first, because you can only generate so much positive returns without taking too much risk. And for example, when you hear that you can make 200% a year after year, this is just false. Like, this is just not doable. If, for example, people that have been in that game for very, very long are not able to generate more than 40-50% a year, which is already insane, well, I don't know how we can. And I think we need to take more of a humble, position when we talk about returns and stock market and everything, because I feel like there's, some kind of culture, and this is really a toxic culture for me, in my opinion, to believe and to make other people believe that you can generate 200% return year after year and be completely fine and go from nothing to $1 million or whatever it is. I think there is a big ethical problem with this, and it's very important to resettle the expectations. So for me, that's really the first thing that we need to take away from that video, is that first of all, you need to resettle the expectations in terms of returns that you can achieve. Because know that if you already generate 20% return on investment on your savings or whatever it is, year after year for, let's say, 10 years, you're already way further ahead than 99% of the investors that have ever lived. And that's not even an understatement. It's important to understand what you are getting into and what are actually good returns and what are bad returns. And to give you some tip, here's my philosophy on how I see it. Basically, the goal of getting actively engaged in the stock market is to do better than someone who wouldn't get engaged, or at least who wouldn't get actively engaged. Meaning that the goal as someone who, for example, get actively engaged in trading is to basically beat the market. If you can beat, for example, the S&P 500, which is often considered as the benchmark, well, you're doing already like amazing, because you're doing better than most of the people who are just passively investing, which is amazing, And usually the stock market gains around like 7% per year. So if you're already just making like 10% a year trading options, for example, that's already an amazing return. And that's what I mean by trading options and usually being aware of what are right returns and what are normal expectations, is that you are not going to make, riches from nothing. The people that make a lot of money by investing, they already have a lot of money. And it doesn't mean that, as a retail person, you cannot make money trading options. But that's just that if you hope to make millions by trading options and you don't have a lot of money at first, well, it's highly likely that you'll fail. And to be honest, in my opinion, it's way better to get into that game knowing what are good expectations, what are good returns. For example, if you already just make 15% a year, it's already amazing, because you're already beating the S&P 500 on a yearly basis on average for sure. And if you're already making this, you're already winning, you're already doing it. Because here's the very, very, very important thing to understand when we talk about returns and when we talk about expectations. The returns that you're getting are directly correlated to the risk that you're taking. And what does that mean? Without taking any risk, you're not going to make any return, or at least any positive return, meaning that you're not going to make any money if you don't take any risk. That's the first thing to understand. And technically, nothing prevents you from making, huge returns on the very short term. Like, you could, for example, trade more contracts, make more money, and on the short term is going to be fine. But here's the catch. If you take too much risk, and so you generate a lot of good returns on the short term, it's very, very likely that at some point you're going to get burned, because the market is going to go against you, and because you will be taking too much risk, you're going to get burned and lose money, like a lot of money. And that's the really fine balance between, taking good risks as to make some good return, but taking too much risk. And that's very, very important to understand. You need to understand that returns are going with risk. They are going together, hand in hand. And if you take risk and you're right, then you're going to make money. But if you take too much risk, the day where the market is going against you, and for example, you get into a margin call, you're going to suffer a lot. You're going to lose a lot of money. And that's the reason why you don't see, investors that have been there like for 40 years, 50 years, not generating like more than, let's say, 40%, 30% a year on a yearly basis. It's because if you take too much risk, you are going to get burned at some point. So you need to make sure that you don't take enough risk, because otherwise you're going to get burned, but you also take enough risk so you actually make money. So there is a balance to respect here, and it's very, very important to understand, because when you see, for example, on YouTube or anything, that you can generate 200% return by just, trading like the deep and whatever it is, whatever the strategy is, know that it's maybe doable on the short term. Like, you're going to get lucky, nothing is going to happen for 6 months, you're going to make insane returns, amazing. But the day where there is a crash, you won't be there the day after, because you'll just have blown up your account. And that's personally what I've been through when I started getting into at least trading or actively investing, is that at first I was completely believing the people that I would see on YouTube, like, yeah, sure, making 200% a year is absolutely doable. But usually when, some people advertise this and everything, they usually are going to sell you something on top of that, and that's where the big conflict of interest comes. Like, if someone tells you that you can make money and then they try to sell you on a course or something, then there's a conflict of interest, because they are financially rewarded for telling you that it's possible to make money. And that's the conflict of interest that bothers me usually. That's why I feel that as much as it's nice to, get actively engaged and get interested in financial markets, it's nice. You still should manage your expectations and know how to make the difference between people that are basically trying to take your money, and so they are, as I said, financially rewarded to make you think that you can make 200% a year, or at least make millions or whatever, and what you can really do when it comes to trading. And I know that it's annoying, because of course, ideally, it's better to believe someone that tells you that you can make 200% a year because you're going to make more money, but it's just not how it's going to go, unfortunately. And I'm sure that some people are probably going to disagree with me, and that's completely fine. Like, we can disagree on subjects, it's completely cool, but I'm sharing my experience. I'm telling you that usually if you can generate a lot of returns on the short term, it's usually because you're taking too much risk. Because don't forget that when you're investing, the last thing that you want to have is like huge drawdowns and everything. I mean, it's way, way, way more important to be able to sleep well, knowing that you can trade, you can generate positive returns, so you can sleep well, rather than taking insane risk and just looking at your screen, like 10 times, 20 times, 30 times a day, and just being stressed the whole day about your investment because you know that you're taking too much risk just for that extra return. And I can tell you that going for the more, I'd say, boring option, or I'd say you generate less money, but at least you sleep well, is way more important than going for the short-term returns. And that's something that I hope will change in the future. And that's why also I created this YouTube channel, because I want to also share my experience and bring something else on the table, is to change a bit that culture that we have on YouTube, at least, because YouTube is literally the only place where it's possible apparently to make 200% a year in the stock market. It's only on YouTube where it's possible, and I think it's dangerous because a lot of people are getting caught up in this and they're losing a lot of money, and that happened to me also in the past. So I know what it is to believe this type of people who are advertising like 300% a year or something. And I know also what's the reality of the thing, because I've lost money because of them, and I know what is doable now and what is not doable. And I think it's important that everyone is aware of this before getting into it. So of course, it's less fun to go into a game where you know that you're not going to make millions or whatever it is, but at least it's sustainable. And something that is extremely important to take into account is the following. Anyone can get into, the stock market. Literally anyone can take a phone, download an app, put money in it, boom, now you're investing. Great. The problem with something that is usually open to everyone is that there is insane competition. When there is a low entry, to enter a market, there's usually an insane competition because the barrier to entry is so low. Everyone is basically rushing into it so as to make money. And there are tons and tons and tons of people studying extremely hard to make money in that game. So when you hear that someone is selling you a strategy where they can basically make 200% a year without taking any risk or whatever it is and make millions, they are probably lying. Because it's important to understand that that game, there's so many people studying extremely hard for that game to make money. Everyone is trying to get an edge, an inch of an edge every single time. So it's very dangerous to think that by placing some indicators on a chart or anything, you're going to beat, the best hedge funds in the world or whatever it is. It's a very dangerous thought to have because it's going to lead you to lose money on the long term. And I'm almost sure that is going to happen, unfortunately. So that's why when you look at the reality of the game, when you look at how hard people are actually trying to make money in that game, because it's an open open free game. Like everyone can get into it regardless of how much money they have. As much as that is nice, that creates an insane competition, and making money, having an edge in a market where there's a low barrier to entry is obviously going to make an extremely hard competition. Basically, the lower the barrier of entry, the harder the competition. The higher the barrier of entry, the less competition you're going to have. And of course, like if, for example, the barrier to enter the stock market was, let's say you need to have, let's say $10 million, then you'll have almost no competition because almost no one has $10 million in the bank so as to enter the stock market. But the problem is, it's not like this. Anyone can enter the stock market with literally just $100. So if you are getting into that game, know that you're already facing an insane competition. And there are some studies that, for example, show that by day trading, you're basically going to lose money. And if you make money, that'll be less than the minimum wage. So if you think that you can switch from nothing, having $0 whatsoever, and making millions in the stock market by following this guy on YouTube, and honestly me included, you're wrong. Like it's very, very hard to make money in trading, and you have to know that. And of course, you know, in my videos, I try to make it nice. I try to make it like simple to understand, but you have to know that this is just one part of the game. Like learning the strategies, doing all of this, I mean, it's really not hard. The hard part is to actually make money in the market. That's where the insane competition is, and that's why you have to take a lot of decisions. Or you basically do like a lot of people, you get passively invested in the stock market and you just make 7% on average. And that's why, you know, a lot of people are just going for this passive investing, is that they realize after a while that getting actively engaged in the market is very extremely hard, and it's hard to make money. I hope it makes sense me going on a rant like this, but you know, it's something that I've seen for years happening on YouTube. Like you see those same guys like year after year, and they're just doing their thing and they're selling the insane scam, I mean, to a lot of people, and it's just annoying to see. That's why for me it's important I'm trying to bring something else to the table. I'm trying to show you like that's the reality of the game. You're entering a game where there's a lot of competition. However, I still believe that it's doable. I still believe that, you know, you can make something out of it. You definitely won't make millions out of it if you don't already have millions, but you can probably generate some decent returns. And if you already go from that mindset where you already have your expectations that are settled, where the only thing to beat is basically the S&P 500, and if you make more than this, then technically you're extremely good, then for me, that's the right expectations to have. The right expectations to have are not about making 200% a year. They are not about all of this that you see on YouTube. The right expectations for me are to think about, okay, if I'm actively investing my money, my measure of success is basically beating someone that doesn't get actively engaged in the market. And that passive investing, you can measure it by the S&P 500, which makes around 7% a year. So if you beat that, you're already extremely good. That's just how it is, point. After that, I'm not trying to discourage anyone from getting into, you know, options or getting into trading in general. My point is you need to be careful about why people are telling you the things they're telling you, because usually they're going to be financially rewarded for telling you this type of things. So you need to make the difference between someone who wants your good and someone who wants your money, basically. And if it was only about me, I think that industry in general should be highly regulated, especially for people that are making videos on YouTube and they are building an audience and then they are selling something. That should be highly regulated. First of all, why do we allow someone to sell, for example, a course when we don't even see their P&Ls? Like that's for me something that is insane to just consider, but that's just how unfortunately it is right now, and maybe it will change in the future. So yeah, I hope that video was useful. I know that it was a bit all over the place and I had a lot of thoughts in my mind about, you know, trading with the right expectations. What does that even mean, having good expectations? But it was important for me to make that video because, you know, it's just a slimy industry that you need to be careful about who you're watching, what you're watching, and even including me. And that's why I want to also show my P&L. That's why I want to show all the trades that I take, because for me, there is a duty of being transparent. When you're trying to make videos and you're trying to, for example, show what you're doing, there's a duty of being transparent, regardless if it's working or if it's not working. For me, I'd rather have someone being transparent who show his losses and be like, all right, I lost because I did this, so don't do this, or, you know, that strategy actually doesn't work. I'd rather have someone like this, rather than someone who's trying to sell me on a course and try to make me believe that making 200% a year is doable. But after that, that's my opinion. Maybe I'm wrong, maybe I have a different opinion, and I'd love, by the way, to hear your views on this in the comment section. So, if you want to comment anything, just don't hesitate. I'll be happy to answer and read any of your comments. On that note, please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.